Hello, everybody. Welcome to the Simon Bader Show, where we delve deep into entrepreneurship, business, and personal achievement. Our guest today is Matteo Turi, an influential person in the financial industry in the Europe and around the world. And he has an incredible journey in financial industry across Europe and around the globe. And he's been a CFO, helping companies achieve exponential success. His course, The Exponential Blueprint, has impacted people around the world. But for those who haven't heard about Matteo, please introduce yourself and please share anything I have missed in the introduction.
All right. Well, thank you very much, Simon. First of all, I wanted to really thank you. It's such a pleasure to be here. You're right. I've had the privilege to work across multiple countries and sectors as a CFO in all continents, effectively. So helping company not just survive, but also really, be extremely successful as much as possible and scale with purpose. But there's something beyond finance, which I'm really obsessed with, and it's strategy and the wealth creation process. Now, in my view, the best CFO, they have the passion for the wealth creation process that really helps them to scale businesses successfully. We got so much knowledge about wealth management that finance is about managing wealth, but someone has to create wealth. So yeah, this is where I come in. Yeah, I like to help entrepreneurs really creating wealth.
Yeah. And let's imagine somebody who's a first-time founder. They're just getting into business. They have no financial knowledge. Maybe they're thinking of hiring a CFO and they don't know how to manage finances. What would be your first piece of advice to them, to that first-time founder?
Okay, my first piece of advice would be, first of all, don't try and be a financial wizard. There's no need for that. What instead you need to do really when you start a business, track absolutely everything. You don't need to, as I said, be an expert, but you need to know your numbers,
Mm-hmm.
Now, cash flow is your oxygen. So you need to monitor it weekly, not monthly. If there's one thing you really, really have to look into and never really underestimate how important it is how to monitor cash flow, really. So that's the big thing for me. Now, even a simple spreadsheet, for example, can tell you when you are running into danger, for example. Yeah. So it's not really about fancy tools. It's not about anything exceptionally unusual, really. It's really about having the discipline. Yeah, you need to have the passion, of course, for running the business, but also the discipline really to track absolutely everything. That's my main advice I would give, really.
Yeah. I think it's a discipline is a key contributor to success in any field. So you have to have that discipline. And I also believe you have to have a plan. Like even if it doesn't go 100% according, even if it goes 20% according to plan, at least you have to plan something to fall and hinge on if things go sideways. What are your thoughts on that?
Yeah, a plan is absolutely essential. As I said, strategy is what you really need. I mean, you don't just get started in business. You need to have a roadmap. You need to have a strategy. You need to really find a really strong, overwhelming reason why the customer will buy from you. And the first thing you need to establish, you need to really look into how your passion to solve a problem will craft a system that your customer will buy for the lifetime. And that will work with the two most important people who are going to come across your business. Number one, customer who are going to buy your product, and the investor who are going to put money into your business. Yeah. Now, those two people, they want to really call your telephone. They want to ask you for your telephone number so that they can put money into your business. The customer, because they want to buy your product. The investor, because they want to buy your business effectively. Or even if they don't want to buy your business, they will have your business growing. So this is really my big recommendation, really.
Yeah. And for the listener listening here, they have maybe a blurred line of how to do that exactly. They're thinking about, I have to get my product right. And then they fall part of it. They kind of like miss the finances and they know exactly how to talk to investors, how to approach them. What's your advice on that? Or how to bind and combine energetically those two and make a winning formula?
Yeah, the winning formula is to find with a solution. So I will break it down into 4 steps that will cover the journey. The first one, you need to be passionate about solving a problem. There's a problem out there, you use your passion. And now By using your passion, you will create a solution. So that's the step number 2. Now, the solution has to be a lifetime value solution for your customer. So the customer must be coming back to you all the time because you found something that will work for them, not just in one transaction. It's not just transaction, okay? So
Yeah. Relational also. I say with most business transactions, not transactions, you have to also be relational. Like you're building relationship with your customers, with your audience, with the people you're serving, with people you're delivering your product.
Absolutely. Yeah. I mean, relation, this is part of the initial phase where you just create lifetime value. You convince your customer that you're going to be useful to them for the lifetime. But then after you've done that, so let's say you created a solution. Yeah, you found a problem, great solution. Number 3, very important. Now it's time to scale and to hiring leaders. That's when you need to have the step number 3, which is you bring in leaders to the table. So it's no longer just about you. You convince your customer. Now you need to convince some people to come and work for you. So that's how you scale. And I often use the analogy of football because I think, you need effectively 3 things. You need to 1, sell, 2, produce, and 3, generate cash flow. These are the 3 big things. Yeah. Each one relate to an attacker, a goal scorer, a midfielder, and a defender. Usually the defender is fine. Now, after you've done all this, you successfully scaled with the leadership team, then it's time to go global. Then you can add value. Now, all these things, one after another one, will get the investor wanting to buy a business. They will just run after you because you're doing the right things.
And somebody who's doing their well locally and they want to expand globally, what should be first piece of advice? What should focus on, let's say, the first couple months before they expand? And another thing that I would like to stress, when's the right time to hire? You talked about hiring people. When's the right time to hire, especially if you're a startup or company who has been bootstrapped and you don't know exactly what's the hiring strategy, what's the best stage to hire your CFO or somebody knowledgeable to help you to get to the next step, let's say in this case, globally.
Okay, so let's start with when you bootstrap in the company. Is that okay with you? So we start with that situation.
Yeah,
okay.
Yeah.
So when you're bootstrapping, my recommendation is no distractions. Just concentrate on what generate revenues, because there are so many people. I think call them shiny object. So you're concentrating on something, and somebody suddenly say, "No, you should do that. You should do that." No, really be dead on. Concentrated on really doing anything that generate revenues, and don't really, try to do something that doesn't really help you with that. So that's the first thing when you bootstrap. Yeah. So really finding that solution. Now, as soon as you have really a concept that is validated, don't really approach, you don't need a CFO until you validated your concept as a minimum, because only when you validated your concept, you will then need to really approach investors. And when you approach investors, you know what they want. They want financial intelligence in the business. Not necessarily an entrepreneur who's got financial intelligence, but they want to start to see someone more independent than a founder who they can trust. So they can say, well, look, we now know who to speak to when we have a problem. Trust me, I've seen it so many times. Business is brilliant. They find an investor, and the investor will impose their CFO. Wouldn't it be better for the founder to choose the CFO instead of the investor choosing one?
Yeah. I think also the founders make the mistakes that they think they're the best CEOs, CFOs, or they like wearing kind of multiple hats instead of knowing this. Maybe I have the idea. Maybe I get somebody else to implement the vision, the strategy, and the finances. What are your thoughts about this?
Well, that's really the one of the key reasons for failure. Yeah. I mean, scaling business is not for control obsessed founders. A founder has to become a CEO, really, if he wants to scale, And when you become a CEO, that's when you create your leadership team. So my very strong recommendation is, if you want an investor who comes, the investor will want to see a management team. They want to see really a customer-driven solution, obviously a lifetime solution. And that's when you really attract the capital. That's when you attract the money. You will never attract the money, the capital, if you're trying to run things on your own, really. That's
I have a thing that I say, as they say in sales. It's also in my book. I say, it's not the thing that sells the thing. It's the thing behind the thing that sells the thing. So in this case, investors, they don't want to know that your business succeed. They want confidence. They want confidence, stability. So that's where your team and expertise and your financial situation gives them that confidence and stability.
Exactly. Yeah. Confidence is number one. Confidence is what the investor wants before they put the money into the line. And that confidence can only come if you have financial intelligence into your business. That's they will never be secondary to them. Yeah.
Yeah. And go ahead if you have something I want to.
Oh yeah, I was just continuing on your thoughts. Yeah, it's about
Yeah.
when you go global.
Yeah.
You go global, you go international. Well, first of all, when you go international, it's really crucial not to be superficial because it's very easy to think that it's an easy game to go international. It's not really, because you have to study. You have to study the politics. You have to
Research.
study the legal environment. You have to study the tax. You have to study really the culture of the country you're going to go. And just let's look at how big businesses become bigger. Okay.
Mm-hmm.
When a big business wants to become bigger and they want to go from local to global, let's look at the example in the world. There are so many. I mean, I could do so many. I could give you so many: McDonald's. I could give you Nike. I could give you Gillette, Coca-Cola. How do they become bigger? They don't just go internationally and they just invest in the second country in the same way as they did in the first one. Well, they try and find partnership as one of the many ways in which a business can actually exponentially grow is by looking at partnership. So when you go internationally, you should really look for partnership. Say, for example, you need somebody who can distribute your products. You don't need to manufacture in the countries, maybe. Obviously, you have to do all the studies, all the research, but all you need to do is to find a distributor. You don't have to really more fancy than that. We've got so many examples. One of them recently, remember Pfizer and biotech, a small company that does a joint venture with a big company. That can be another solution. And that can multiply your value by 10, if not 100 times. So going globally, you only go global after you conquered your market, really. And after you have a product that sells very well, product or service, should we say that sells very well in your own country. And then you go global. Now, each business situation is really, really unique. I wouldn't legislate, exactly what to do in each case. But yeah, the key word here is education, and obviously having a good management team that can give you the right advice as well. Yeah.
And especially I want to talk about now with all the regulations and tariffs, people wanting to move globally and expanding. What's your advice on it?
Yeah, it's even more important. I mean, I have to say, yeah, that this is why a good CFO really is somebody who keeps abreast of the market. Doesn't mean the stock market, you have to look at the cycle, for example. Is the economic cycle, peaking, or is it just, starting to come out of recession? You find so many businesses, they fell when they should be thriving. I'll give you an example. We entered recession, of course, in our history. After the recession, you expect the business really to thrive. Now, that's when, unfortunately, you see the most painful failure, because you see businesses that have been in recession mode for 1 to 2 years. They start to receive so many orders suddenly because the recession is over. They cannot cope with the orders. They don't speak to banks because they felt like, okay, well, the market is gone. And right at the moment where they should thrive is the moment when they fail. So this is another very important quality that you need to find in a CFO. Ensure that there's a very strong relationship with the environment, with the external environment. Speak to banks all the time, speak to investors all the time. It's not just about, closing the books every month. It's really about managing the business.
Yeah, and a key part of managing your business and making your business thrive is one piece of advice my mentor early on gave me is that your network is your net worth. So the people you know, the people you make your connections with is really about how you make things successful. It's not what you know, it's who you know.
I couldn't agree more on that, Yeah, absolutely. I mean, end of the day, when you think about balances in bank accounts, they're facilitated by people who invest in your money. They are facilitated by banks that support you. So yeah, the numbers, they don't just just fall off the tree, really. So absolutely right for that. Yeah.
Yeah. And going back to you, you've been a CF. How have you helped businesses moving from stagnant to exponential and expanding? Just give us some idea what you do and exactly what you've done in the past, so our listeners can understand who you are and what they can learn from you.
Yeah, I mean, as you say, stagnant is a different phase than scaling up. And in actual fact, this is very, very important for many people to know. You need to move from theory to practice. Now,
Yeah.
each business has a different stage. It could be stagnating, it could be starting up, it could be scaling up, it could be exiting. Each one of those situations really needs a different solution. Just to come back to your question about how do you transform a stagnating business into really a scaling business? There's actually an example I want to give you. It's about medical technology. The company was kind of stagnating, only really trading in its own country in the UK. And we were looking for a sort of major campaign to take the business internationally. But it was loss making. So we went to the market and looked for some money, for some equity investment. Instead, what we find was even better. I was actually put on LinkedIn, which is, that's where obviously I got a big following on LinkedIn, especially with investors. So they actually asked me, what do you need? And what we came out with was, a situation where the business had only raised for the previous 10 years, only $700,000. We went out to raise $7 million. Now, that $7 million, we effectively, there's lots of storytelling there, obviously, to do. Well, obviously, you have to convince an investor that they're not going to lose their money. Actually, they're going to fry with your money. So we build a very credible business plan for expansion into new markets. And from actually loss making, which is stagnating, this is after 1 year of really stabilization, marketing, lots of discipline in managing money, because the investor would only give the 7 million if they see a CFO on board, really. So I gave them a lot of confidence. I spoke to them every week. I told them about what the business was doing. I told them, look, we are not really recruiting fast, or we're not going to recruit as we budget unless the sales are going to be out of budget. So I was going to wait. Okay, let's wait first for the sales to be out of budget. And only then we recruit. Because when you're dealing with investors' money, you have to obviously be very accountable about what you do. So, and the story, really, we did that first year. I used to run the board meetings as well with the investors. So we used to tell them everything. I used to present the result to the board. So as I'm doing it now with other clients, really, so I still do it, of course, yeah. Eventually, after 1 year, there was a breakthrough. The R&D that was the main reason for the investment for the $7 million produced big results. And then eventually the business went on to be scaling really successfully and internationally as well. So yeah, that's one example I wanted to give you.
And interesting, like when raising money, how do you raise money that's maybe above your valuation? It says it was business was worth $700,000 and you raised 7 million. So that's very, very impressive. Explain to me how you could do that specifically to a new founder.
Yes, in that particular case, again, each case is unique. In that particular case, we did not raise equity, but we raised venture debt, which is another type of growth capital. So growth capital in which you take some risk, of course, because when you raise that, you have to pay back. It's not the same as equity. So each situation is unique. I would always say this. I mean, this is why actually I created the Exponential Blueprint, is to really level up entrepreneurs with investors. Yeah. Because most of the time, as I was speaking to an entrepreneur actually on Monday, 3 days ago, and I was asking the question, is raising capital. They say, what's the valuation? Can you show me a calculation? Now, I didn't have one. And I told him, well, you're very vulnerable with investors, because if you do not have a valuation, or if you cannot defend it, you might end up actually losing the investment that you might be able to make. So what I would say is I would never really lie about the valuation. I would always tell the story in a way that the investor would really be driven towards the most optimistic scenario, because only that's what we want to achieve, really. But yeah, it's not about making something up that doesn't exist. It has to be a real situation where you can show an investor that you go, for example, the right management team. Now, that's the first thing they really look at. If they look at a lonely entrepreneur looking for money, they will not give you any money. But I see an entrepreneur who is taking to build a management team, they will give you the money because they will see the money will be very well spent, really. So yeah, to answer your question, valuation can be very, very subjective.
Absolutely.
It's about, in some situation, the valuation doesn't work because you're growing, you don't need equity, you need debt, for example. So yeah, I would entertain each situation with its own merits. Yeah.
Yeah, and you teach the Exponential Blueprint. It's a course many people are passionate about. Please share about what people learn in your course and what is one mindset shift they get when they go through your course.
Yeah, thank you so much. Yeah, it's been such a great experience for me because I only started the Exponential Blueprint in January. It's only been 3 months in 2025. I never thought I was going to run a newsletter, but yeah, I mean, it's great. Obviously, you can do so much more than on LinkedIn, for example, because you can actually tell so many more stories and you can actually expand so much more. Now, this one thing which I would say I found that people understand so much more than I did before. It's about the exit plan. Now, even if you're never going to sell the business, the fact that you run the business with an exit plan in mind will effectively change the culture of the business, will change the way in which you sell to your customer. It will give the business an edge that will be capable of beating competition, of course. Obviously, I'm not going to say that there's a magic formula, but what I'm saying is if an exit plan in mind. And secondly, yeah, every action, every activity in the business will be progressive and will lead towards success. So this is probably the one big thing I would say about the Exponential Blueprint. Yeah.
And talking about yourself, what's something along your journey? You learned a lot of lessons, a lot of errors, you corrected a lot of mistakes you make. What's something you learned you would have told your previous self, given some advice on, like your younger version?
Yeah, so I'll say this is, there are so many lessons in our life, but I think the biggest one is really learn that, there are stereotypes in our society. There are stereotypes we tend to listen to, we believe them, and then they are dispelled because we learn so much. It doesn't need to learn, really. The big lesson is, just to learn that working hard is absolutely not the solution to be successful. Working hard is actually, it's a wrong stereotype for many. So what you need is really to build a good network, but you need to leverage yourself with other people. You need to leverage yourself with people who you surround yourself with people who are better than you.
Absolutely.
Don't want to paraphrase what Steve Jobs said, It's about really, out of a complexity, you create a simple solution. You can only do that if you leverage with other people. You'll never be able to do that alone. And actually, you will fill yourself with negative energy because you haven't done what you wanted to achieve. So that's one big lesson that I learned earlier on. And I would say for many people, don't be obsessed about control. Share your problems with other people. Speak to the people that you want to speak to as much as possible, as frequent as possible, because that you will find a solution.
Yeah, I wanted to add something. So there's a saying, the road to heaven is narrow, but when you get through the door, there's an endless abundance there. So when you're facing challenges, discouragement, especially in new time founder and you're growing, you have to acknowledge you're growing and you're going through this. And if you keep going and correcting your errors, you're going to eventually get there. And that's where people like you and mentors and people who help you have to be smart who to ask advice from also. I think you do that very well over your course, and glad to have somebody like you in our network.
It's my pleasure, Simon. And likewise, I learn from so many people every day. There's always something to learn. And I think, one of the things I always say is learn to enjoy the self-discovery process. Yeah. I discover myself every day. When you enjoy that, then you can actually enjoy everything else in life, really.
Yeah, absolutely. And before we wrap up, what's one piece of advice you would leave the audience with? One financial principle that could be universally applied everywhere across the borders, and something can implement and skyrocket their personal and business success.
I run a system called Balanced Scorecard approach. Really, what I would say is, remember this: business needs passion and discipline. Passion will win one game. Discipline will win a tournament, really. In my experience, I can sense a business is going to be successful if there is a pattern. Now, a pattern is when it's more predictable. There's no chaos, So the financial advice I would give to entrepreneurs is build really financial systems where you can find real-time information. You can react to what's happening in your business. So you can learn immediately about whether your margins are not coping and not really doing what it was supposed to do. The biggest one, however, is because I see so many businesses doing this mistake, is a ratio that I use a lot and I would tell everyone to use. It's like a golden ratio because too many people, they are optimistic about acquiring customers.
Absolutely. They don't know what they don't know.
So just think about this, having two numbers. One is the lifetime value from customers that you're going to obtain from one end. That's one number. The other number is the customer acquisition cost, including everything: salary, advertising, marketing activity, anything. Now, if the lifetime value is more than 3 times your customer acquisition cost, you are doing well. Okay. If it's less than 3, check what you can do to make it above 3, really. If it's below 1, you are losing money. You are probably going to fail in your business. So that's a very important, I will call it a ratio, like a foundation for any business, really.
Yeah. My advice is also study the successes of other businesses who've done really well. Do your research very well, study their successes, but also more importantly, study the failures. There's a book really called, I'm not affiliated with it, it's called How They Blew It. So it shares a lot of stories how big companies failed and what the mistakes they make. So there's a lot to learn in the mistakes that others make vicariously and to kind of shortcut your way to success in the financial world and business world.
Yeah, I always say this, in order to find a solution, you must be passionate about the problem. The problem of business failure is my passion, effectively. And in fact, Exponential Blueprint is a newsletter that is effectively a declaration of war against business failure. It goes well beyond finance, because the reason why a business failed, obviously there is a lot of financial is the reason for failure, really, the lack of financial intelligence. However, in order to find a solution to the problem, you need to go beyond your own field. So I go beyond finance, really, to find a solution to the problem, because finance is great, but, it's not just about managing wealth. It's about understanding how you create wealth as well.
Yeah, absolutely. It's like kind of have to step out of your role and put to somebody else and see how they view it and have a perspective at their own dish.
Yeah, absolutely. That's the that's the way to solve a problem. You need to just venture outside your own area of expertise. You need to get passionate about it, and then you will be successful.
Yeah, absolutely. That's where again mentors come in and people you have to take advice from, and people who have a track record, and that's it. And Matteo, it's been a pleasure to have you on the podcast. It's been a great conversation we had.